Yo, what's going on, guys? So I've been having difficulties with my camera. It's not a great camera. I'm probably gonna get a new one, but hopefully you guys don't come to see my face. Hopefully you come to learn. I don't know if that matters or not, but for now I'm just not gonna use it because my voice is all laggy and it's kind of weird to watch. So in this video I'm gonna explain to you guys how to identify order blocks easier. And these can be very subjective, and as ICT defines them, he says they're like a change in delivery. Or that's like one of his millions of definitions, but I'm gonna teach you like a more simplistic way of how I look at them. So yeah, I know a lot of people have questions about order blocks, and if you don't understand what an order block is in live time, it's probably because you've heard of different definitions, and they can be very subjective. So one thing I might not or tell you might not be the same as something someone else tells you. So yeah, so an order block, what I look for in an order block is I look for an obvious red or green candle before an up or down move. So what do I mean by that? So when an up move, in an up move, I look for an obvious red candle. So this is the 1 minute time frame, by the way, guys. So here's the obvious red candle before the up move. Why would there be a random red candle before an up move? So the answer to that is manipulation. A lot of times these banks and smart money, they actually get in and get out at these order blocks, and they usually get in and get out at break even. They don't get out in or get out for profits, but a true order block, they get in or get out at break even, and that's what helps them move the market. Okay, so in order for them to move the market, sometimes they're not able to make money, but they're not going to lose money either. Okay, so in a video I watched a while ago, I forgot what video it was, but it kind of explained this theory that if a bank or smart money sells here to get the price going up here, imagine if billions of dollars sold right there. That means that either if they're selling their position right here and then buy back for it to go way up here again, they're going to want to get back out of their position here again. So they're going to want to sell back here because they know if there's liquidity up here, which in this example, I guess there's liquidity right here. See all these equal highs? So if they see these equal highs and they want to stop retail traders out here, what they do is, by the way, I'm not sure if this is exactly right, but it's very, very close. What they do is they will get in or get out of position, and they'll cause this big move up, stop our retail traders, and then the retrace back to the order block is when they get back in or out, and they get back in or out at break even, so they don't lose money, but they don't gain money. So that's kind of how they move the market. So this is the 1 minute chart. You can literally find order blocks in any chart, any time frame. So in this situation, here's the red candle before a green move, and technically the whole candle is the order block. So if I draw the zone with the whole candle, you can see we never go below this order block. And as you can see right here, this is also a fair value gap, okay? And we initially bounce out of the fair value gap, bounce again out of the fair value gap. We never hit liquidity up here, but we come back down to this order block and then we hit liquidity. So depending on the situation, you're gonna have to figure out if you want to take the fair value gap or order block. And in this situation, if we draw the fib from higher or from here to here, look, you always want to enter a position under the 0.50 retracement, okay? So if you're longing, you want to enter under the 0.50 retracement. If you're shorting, you want to enter over. So in this situation, you're longing. Do you see how this fair value gap isn't on the 0.50 retracement? So that would not be a good entry, but you can see the order block is under the 0.50 retracement. So this would be a better entry, the order block. So in some situations that the fair value gap is under it, you want to enter in the fair value gap because sometimes we'll bounce out of the fair value gap without even going to the order block. But other times, if this is under the 0.50, you want to enter under here. And if you say this was under the 50, say this fair value gap was under the 50, you'd enter there and your stop loss would be below the order block, okay? So that's basically what an order block is. It technically is a whole zone, but there's also like thresholds in here. So there's like a 50% you want to see it hold, and then there's the open. So when I enter my order blocks, I always enter at the open because that's where the algos get in and out. But some, like ICT explains, there's a 50%, and then he also has the close of this order block mark. So it actually does go under the close a tiny bit, but it holds this whole order block. And again, these can be subjective. Some people just draw the whole zone on the order block. Honestly, depends on how big the candle is, but this is just an example of a bullish order block. And another thing is, if you're bullish, you want to see these bullish order blocks hold. Okay, so if you're seeing break below bullish order blocks when you're bullish, that means your bias is probably wrong. Okay, so when the bias is bullish, you want to see these being respected. So if we went below this, that would not be good if you're bullish. And if you're bearish, you want to see the bearish order blocks respected. So all those should be respected. So let me find an example of a bearish order block real quick. So again, it's going to be a green candle before a down move. Okay, so I want you to notice something here. We have a higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So the bias in this is clearly bullish. So what happens when we create a bearish order block? You can see that the bias is clearly bullish. Just looking at this higher highs and higher lows, you can see this bullish or bearish order block is not that well respected. Okay, and the most respected ones usually are going to reject at the open. So again, I draw the line at the open. It's up to you, but technically the whole candle is an order block. So if you do get an order block, make sure the stop is past the order block. So in this situation, you can see that this is not even respected. Why? Because the bias is clearly bullish. Okay, and then look what happens. I want you to notice something. I didn't plan this out. I literally just noticed this, but look, we create a higher low, higher high. Look what happens. We break this last higher low. Okay, so that would be a market structure shift. And what do you notice? In this situation, we create a fair value gap, but this fair value gap is not in premium. So if we draw a fib from this high to this low, as you can see, this whole fair value gap, most of this fair value gap is not in premium, so it's not where most people are going to short. But if we look, there's actually an order block. So what happened? So we have an order block right here, this green candle before this down move. This is just a doji. I don't really count that as an order block. So look what happens if we draw a zone from this green candle. Boom, initial rejection all the way down, but we do not hit liquidity. Okay, so notice how we go down, but this would be your target right here, because that's liquidity. But notice how we do not hit it. Then we go back up again, and we go to this, and see how obvious this is? See this green candle in the middle of nowhere? This is another obvious order block, so that's kind of what you want to look for. So you can see if we draw this from the open, this is way deep in the premium. Okay, not super deep in the premium, but this is probably around the 0.62 fib area to the 0.75, which is optimal trade entry. So you can see this is respected a lot more better than this. Why? Because this is just in premium. Okay, it still isn't premium, but this is more in premium, so this is respected a little more. And that, again, this is the whole, like this whole candle is the order block. But again, I enter here. Okay, I enter at the open, and my stop loss is usually above this line. And if you really have a good risk management, then your stop loss should be above here. But I don't want to afford to lose all that if I do stop out, because yeah, that's just my risk management. And as you can see, there's also another order block right here. See this green candle before this down move? So this is way in the premium. If we broke this order block and got to this, that probably wouldn't be good. That would probably mean the bias is bullish. But again, you can see this supports price going down, this supports price going down, and boom, this supports price going down. And you can see we rejected out of this fair value gap initially. This is kind of a big fair value gap. We reject out of this initially, don't hit liquidity, go back up, reject this order block, boom, go back up, reject this order block. So these are like very obvious bearish order blocks right there. Let me show you another one. So right here, green candle before a down move. But in this situation, look, if you draw a fib from swing high to swing low, this fair value gap, a lot of this is actually in premium already. So why would we go up to this order block and reject without rejecting from this fair value gap? That means this fair value gap would be invalidated, and this is a pretty good fair value gap in my opinion, because again, the 0.50 to 0.618 fib is above, or is mostly in this order block. So this is where you wanted to enter. You wouldn't want to wait till up here because that's almost near the swing high. So by the time you get up there, that would mean there wasn't much sell orders in here, so that means the price isn't that bearish. And you can see we rejected this fair value gap. We hit liquidity, and when you go back into this fair value gap, you do see some more rejection. You see another rejection out of this fair value gap. Okay, so you reject. Again, we don't have liquidity. And then right here, draw the line at the order block. Yes, we reject it. Yes, this is well respected. But by the time that we get up here, all these sell orders are already filled. So the bias is bearish now. And technically we're making higher highs and higher lows in this situation now. And maybe the higher time frame is also bullish. So again, I'm not like maybe maybe there's liquidity above that we needed to hit. So that's just an example. Let me just show you a couple others. So some people also have questions about these, if there's like 2 red candles before an up move. A lot of times if you go to the 10 or 15 minute time frame, it's usually like 1 candle only. So like what you can do is, I still just use this candle before that move, but I guess some people do use this. It's all subjective, as I said. Or something you could do is you could draw it from here to here, but this is, why would anyone want to enter here? Okay, this is a huge zone. In this case, I would say if you're getting in this fair value gap, just make sure your stop loss is like under one of these, okay? Because this is kind of a big zone. You do not want to enter these zones. You should be patient enough to wait for much smaller zones that you can enter, not these giant big zones. So again, this is an order block, green candle before an obvious down move, but look, swing high to swing low. I don't even think we did go, oh wait, yeah we did. So I draw it from this swing high to this swing low, because this was the low before we went back up, and we barely wicked in the premium right here. But you can see if you did take an entry here, my stop loss would be above this order block. And sometimes you can make it above the open, because a lot of times if this fair value gap is this clean and this order block is this clean, it won't really go above the opening price of this order block. But you're gonna have to study and backtest in order to find out like what like works and what doesn't. So look here, ready? Same exact setup, same candle, green candle before the down move. So this is a bearish order block, and what happens? Well, we do create a fair value gap, but see how this is kind of tinier? It's still respected because we don't close above this fair value gap, but it's not as big as this, and it's kind of tinier. So we go above it a little bit, but boom, where do we reject? This order block, and it respects this opening price of this order block very well, and then boom, we go down, we hit liquidity, this last swing low. So that's something to take into account. So this is a bearish order block. Like a bullish order block would be, again, a red candle before a down move. So if we can find it real quick. I already showed that example. This would be a bullish order block, or this would be a bearish order block right here. But again, this bearish order block is actually under the 0.5 retracement, so I wouldn't take this one. And as you can see, it's not respected at all. So what that means is if we drop it from here to here, this bearish order block is under the 0.5. So this would not be an order block I would take. But this would be a fair value gap I would take. Why? Because it's above this 0.5 level. So yeah, when you get a candle like this, see this green candle for this down move? This candle's kind of huge. I make sure the candle's kind of clean and small relatively compared to the next few candles. So like this is kind of even more than this is more than half the size of this whole down move. So this would not be a good order block. This is likely just a bunch of big buyers right here. So like a candle like this, see how it's way smaller than this down move? This would be a good order block right here. And you can see, as you can see, it clearly rejects. But again, draw this at the opening price, you can see how well respected this is. So like a bullish order block would be, let me find a bullish order block example. So right here, this would be a bullish order block. This red candle before this up move, and the whole candle's order block. But look, you want to get in here. This open will act as support. So you can see how it goes up nicely after bouncing up that. But yeah, again, order block, red candle before giant up move, change in delivery. This, I guess you could consider order block, but this candle is kind of big. I mean, it's still small compared to the actual whole move up. So this would probably be a valid order block. This is a perfect order block. If we came down here to this red candle, honestly, that'd be like I'd have a very good conviction that we'd bounce off this. But even if we didn't, even if we went under it, what you usually see is these clean order blocks, you can usually scalp them a lot. So as soon as you get down to them, if you have your limit right here, we usually go a couple points or bounce a couple points. So you can scalp a lot of these, even if you're wrong, because obviously you can take profits or set stop to break even if you get like a sniper entry like that. So hopefully this helped clear your things or your mind up on order blocks. Again, you want to look for clean candles. So green candle before this downward move. This is a very, very clean candle before a down move. But something like I guess this isn't that clean because first of all there's 3 candles right here, and I guess you could say this is the order block, but again, I like to look for the single candle setup. So like right here, see how this is only 1 green candle before the down move? If you draw it here, it never even got up there. So if you did get it in this fair value gap right here, your stop loss would be above this order block, because this would definitely hold it down if it got up there. So yeah, hopefully this cleared your you up about order blocks. Let me know if you guys have any questions. Join my Discord if you want, and ask me questions in there. But yeah, hope you guys enjoyed, and peace out.